Good afternoon, this is Ron Brown again. It's still May 17th, 2024. I'm going to go a little more into structure and direction and look for a potential debit spread trade. So once again, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. What I'm going to do in this video is, first of all, I'm going to go into the designer, go to the reference groups. I'm running Thinkorswim in the background. I want to update my industry groups. So I'm going to click on that and go under Tools, Rebuild Indexes and Group, and it's going to give me the current industry group percentage up or down. Just takes a few seconds to do this. Okay, and next I'm going to go into my non-index files, and this time I'm going to go down to Options, Best Securities to Trade, because these are very liquid options, much more so than the options I pulled out of bar charts. So if I take the filter off by holding my Shift key, you can see there's 75 securities to choose from, and they're not only stocks, they're ETFs. So I'm going to click through to the warehouse view. You can see that it's best securities to trade up here. And I want to look for, first of all, I think I'll go in and look for micro trend stocks where just the 3 is above the 6. And you can see that there are only 3 stocks in here. These are the intraday quotes. 2 of them are up. Intel is down. So let's go ahead and take a look at Intel. I think they just reported not long ago, and this is Intel, and we're going to look at the structure. I'm going to make sure that I'm in here. You can see the gap down on earnings. So let's look at this structure. I'm going to see if I can zoom in a little bit more on here. So after this gap down here, this is actually a positive structure. Remember, structure is the high and low price of each interval. So not much movement here in either direction. But it closed right at where it opened, so it's kind of a neutral structure. This is a positive structure because the direction is positive, the open to close, and it closed a little bit higher than the prior day. Now this is both a negative direction and a negative structure because it's wider than this, so the structure is negative. But on the following day, it opened higher, gap opened from here to here. It traded up here, so the structure from low to high is positive, and the direction is positive because of the open to close. But you can see that there were some sellers in here, or there wouldn't be that upward wick. So moving on, positive structure, positive direction, positive structure, a negative direction because the close is lower than the open, but it's a positive structure because this is higher than this, and then a positive structure, and then this is what's happening today. So far it is a negative direction because it opened here, traded down, but it's in the middle, so it's kind of neutral. Next, I'm going to look at this and determine if there has been a price action trend change. I'm going to minimize this, and I'm going to take you down here to price action trend changes. And what we're looking for is the third consecutive or non-consecutive, should be consecutive, higher high, which will change the price action trend from down to up. I just noticed that typo I may get around to fixing it. But anyway, we're looking for the third consecutive or non-consecutive higher high, which changes the price track action trend from down to up. Reverses for downtrends. This next sentence here, price action trend changes do not have pivots, which makes it an unconfirmed price action trend. Go back and highlight this. So let's go back to the chart. What we're looking for is the third higher high. Now looking at this, this could be considered the first higher high here. I'm going to go ahead and follow the rules here. So this high surpassed this high, and this high surpassed this high, even though this is negative structure, but the high surpassed this. And then obviously this high is higher, so this is the third higher high, which is a price action trend change. It doesn't mean it's going to continue to go up, but these are just the things that we have to look for. And look what's happened since then. It's gone from around 30.60. What's the current price? Up around 31.75. So I'm going to say the price action trend change did change back here. Yes, I'm looking backward now, but if I were to count this, so with the price action trend change up back here, that would have been a place to consider maybe putting on a debit spread, but the trend is clearly down here, and maybe it's only good for a counter trend trade. But I'm just going to assume that the bottom is in, and I'm going to take a look at a debit spread. But before I do that, I want to look at the other context here. So I'm going to go to the weekly charts. You can see that the context is clearly down on the weekly chart. If it were up like it is over here with these constructive closes and so on, it would be a different story, but there is a lot of overhead resistance here. Let's take a look at the VPA flags, and you can see that there is no supply here. Strength seen returning, confirmation of that strength, and another no supply VPA flag today. And then if we look at the context with the 3-6, you can see the VPOC turned positive here. There was a pocket pivot volume here, and the 3 crossed the 6 back here. So we have a price action trend change, and we also have a 3 crossing the 6, which is a micro trend. Now I'll put it in perspective here, or in context. I'll use this one with no VPA, and you can clearly see that the fan is down, the pressure is on this, so this is why I said this may just be good for a counter trend. But it's so oversold now, earnings are out. There's a pretty good chance, if this market holds together, that it'll go higher. So next, let's go take a look at Intel. I already put the symbol in here. I'm going to go to, I'm using paper money here. I'm going to take a look at it. I want to go out at least 30 days to give it a chance to work. Before I get into this, let's take a quick look at those charts, and you can see my weekly chart here, the daily chart, which is showing pretty much what I showed in HGSI. You can see the earnings date here and so on. But It's selling off a little bit today, or just a slight pullback, but this short-term price action trend is still intact. This is a 16-minute chart. This is a 78-minute chart, weekly chart, daily chart with my moving averages. Looking down here at the 16-minute chart, I'm pretty sure this is 16. Yes, it is. 1 day, 16 minutes. You can see over the last 4 periods, it was selling off, and then buyers are coming back into it. Even though the market is down slightly today, the comp is down 14, but still very strong. Anyway, I need to get back to INTC. And I'm going to go into the Analyze tab. Like I said, I'd like to go out about a month just to give these a chance to work. The advantage of a month is they have time to work, but they move very slowly. If you want faster movement, you should trade shorter time frames. Now, the first place I look is volume and open interest. I have several tabs here for different layouts that I have set up, and I'm looking out 35 days, and you can see that the bid-ask spreads are really tight on here, a couple of cents. And the volume, or the open interest that is carried overnight, heavy open interest on all these, and then here's today's volume. So these are $1 apart on the strike prices. What I'm going to do is I'm going to look for a $5 spread. I'm going to go, first of all, I'm going to change this to delta, gamma, theta, vega. I'm not going to get into all that. That's something that there are plenty of books out there to learn about this, but you can see that I'm going to change this. I want probability of implied volatility delta and probability of being in the money. Now the delta is the speed of option, essentially. So I have a delta here of 77 on this option, the 30 strike price, which means that if the stock moves up $1, this option will gain 77 cents. And the probability of this option being in the money at expiration, it can be 1 cent in the money, but the probability based on volatility is 73.76%. Notice as you get deeper, as the strike prices go, or as I'm going lower, that there's a 98% chance of this option being in the money. But look at the spread on this. It's just what you want to do is you want to find options with tight spreads. So you want to trade options near the money. What I'm going to do is I'm going to look at a 30. I'm going to hold my control key down, click on the 30, and I'm going to go to the 35, sell it, buy the 30, sell the 35. And this is what's called an in-out spread. This spread is in the money, this spread is out of the money. The advantage of in-out spreads is the volatility is 30.14% here and 30.73% here. I'm actually selling an option with a little higher volatility, but they cancel each other out. So it's a pure price move on these debit spreads. And the debit currently is at 212. So if I go to my risk profile, it shows me that I am slightly, here is break even. I'm just slightly out of the money right here, which is the horizontal line. And if this stock, or if this spread, or the price, I mean, is above 32.12 at expiration, I'll break even. If it goes to 35, which is my out of the money spread, I would make the full amount. But what I generally do, what I always do, I should, I go ahead, if I get filled, I'll put a sell stop in for 55% profit. That's my goal. Now my goal is to make that 50 or 55%. The most I can lose is $211. The most I can gain is $289 if I held it to expiration. And this is on a single contract. This is a very simple strategy. All you have to do is be correct on direction. If you're not, you know what your risk is. That's what I like these debit spreads. I know how much I can lose, and if I lose 50% on this, I won't generally, I should say generally, because I've held them to expiration and lost the full amount, but I try not to do that anymore. I'll take a 50% loss on it to get out around a little over $100 loss on this if it goes against me. Now, if I were feeling brave, I would do a 10 lot, and there's a couple grand right there. And if I get the direction right, I can make some pretty decent money over a 30-day time period. The beauty of these is the options, or the price does not have to move very far. It can be frustrating if the price moves up, and if you had just bought the security or bought a call, which would increase rapidly if you're right on direction and speed. But if you're unsure and don't want to take the risk on of a call, this is a good way to do it. I'm going to go back down to 1, and I'm going to deselect this. I'm going to go back to the simulated trades. Let's say that I bought a 30 call outright. A single call, there's a 30. And now if I look at the risk profile, I have to be at 32.42 by expiration to break even on this trade. Now I'm laying out about the same amount of money. One contract be $241. But let's compare this. So my break even here is 32.42. If I deselect this and go back to the vertical, I have to get to 32.11. But if I wrote it to expiration and if it closed at 31, you look at the cyan line, I'd be down over to the left, I'd be down $108. If I bought the call, I'd lose around $150 somewhere in there. If I was at 31 at expiration, if I were at 30, I would lose the whole amount, $239, and I would lose the whole amount on the spread also. If you're real bullish on a stock, you should just buy options outright. If you think they're going to move and move quickly, that's the best way. But if you're unsure, or if you just don't like the stress of putting money out and watching it disappear if the market goes or stock goes against you immediately, then the spreads, in my opinion, are the better way to go, because you can have ups and downs and still come out all right and not sweat it, because you know your maximum loss. You know your maximum loss on a call option too, but those premiums can evaporate fast on an outright call. There are very few people, from what I've read, that make a living just buying call options or buying put options. The money is usually made on the other side writing the options. That's a whole different ball game. I'm just primarily going to show you debit spreads, bullish and bearish, and this is a bull spread because why? Because it looks like the price trend has changed to the upside. By the way, that spread I showed in a video a week or two ago, crowd CRWD, I ended up calling that right, and I got out with a 50% win on that, which is a nice percentage return for just a few weeks in the trade. I also had Microsoft, which was a winner. Well, here, I'll just show you my March trades. I mean, my May trades. My first one, SOUN, that was a loser, but it was a what's known as a married put. I have a position in SOUN, 300 shares, and I didn't know how it was going to react when earnings came out, so I had a married put on to protect my downside because I want to hold on to that stock, or at least I do for now. It protected me to the downside, cost me $99, but that's fine. I'm still ahead on the trade. I'm still holding the shares, and I plan to hold them. So that's why that's a loser. Microsoft, and I don't trade much at all anymore. I mean in size, and you shouldn't be trading size unless you can afford to lose it. And I'm so busy with HGSI developing things for you and for me that I just like to dabble anymore, but I like to be in play. So what do we have here? Microsoft, about just one contract for $260. That's the high end of what I'll spend on a debit spread. Exit at 405, and I was in that trade for 13 days from the 1st to the 13th, or 12 days, and that's what it cost me. 55.77% gain on that. Well, here's the number of days right here. It's figured out for me. SMCI, this one cost me. I did a $10 wide spread, $4.95. It looked really good at first, and then the stock tanked. And if I'd have held on to it, I'd probably be even on it now. I'll take a look at it here in a second. But I was getting close to the 50% loss, so I just decided to take it off. And you can see that I graded this as a bad trade. I lost 39% on that. The amount I risked was double what I normally doubled, so that hurt a little bit more, but that's all right. I'm trading and enjoying myself, and I'm making a little bit of money here. So the next one is NVIDIA. This one I got in on the 1st also, and cost me $235, so I got a good price on that. Got out at $370, $135 profit, but it was on a percentage gain. It was 57.45% for 14 days. Crowd, I got in. I must have done that video on the 3rd of May, because that's the day I got in. And notice these are all out over a month, every one of these, except for the married put. And that one, I closed at 50% profit. Good trade. Bought that on the 3-6 cross. These are on pullbacks here. And these are vertical bullish spreads. This was a married put. Anyway, for the length of time that I was holding these, and the percentage returns on the winners was a good return. I don't really call this a loser because I was SOUN, because I was protecting my position. It was insurance. This is really the only loser, and if I hadn't chased that stock when it was on a big up day, that wouldn't have happened. I didn't go through the process that I'm showing you today. I just saw it moving and I went ahead and I thought I was getting a really good fill price on this spread amount, and it just worked against me. So the intraday was the 8th. Let's take a look at that SMCI. I want to look at the chart. Okay, here. Right here, 5th, 6th, 7th, 8th. I bought it on this day. I saw this move up here, and I thought it was going to go up, and then it sold off hard. Let me make this full screen. Down here, and then 3 days ago, or 4 days ago, it rallied and came back, and here's where, let's see, actually I would be ahead now. So sometimes it pays just to write it out and see what happens. I had no intention of selling it, but it was losing value fast. Look how many dollars this stock moves at this point. What was the close there? 824, got down to 764 in no time, and the premium was just really evaporating quickly. If I'd have held on, though, I would be fine. I'd be about break even. No, I'd be ahead right now. That's why it doesn't pay to sit there and watch your profit and loss during the day if you have these positions on. But I still make mistakes, but I make fewer than I did in the past. And besides, it's not that much money. I always know my maximum risk, whether I'm just trading naked stocks or spreads, or if I occasionally just buy an option. Okay, I hope this has been helpful. I meant to go ahead and execute that spread on Paper Trader on Intel, but the market's closed now. While I was rambling on, the market closed, so I won't be able to do that. But I'll do a lot of this going forward with this series of videos. Thanks for listening, and I'll be back with more videos next week.